Good morning, everyone. Welcome to Mortgage Monday again. Today, the training is on the land loan program, and also at the end of the presentation, we'll have Q&A. If you have questions on your mind during, please put it on the chat so you won't forget it, and we'll cover those questions at the end. So, I'll get started on the land loan program. The purpose of residential land loan programs is to provide an interim loan for buyers to purchase their land with the intent to construct a single-family residence for their primary home, second home, or rental property. Refinancing a land loan against land they already own to lower the rate is also allowed. Most land loan terms are very short, from 1 to 3 years, with interest-only payments every month and a balloon payment due at the end of the term. This is because of the desire for the lender to not be exposed for very long on what they consider to be a high-risk loan. The vacant lot should have the infrastructure completed, such as roadways, sewer, water, electricity, etc. If so, the down payment requirement is normally 25%. If the land does not have this infrastructure, it's considered raw land. The lender will inquire about alternative sources of water and energy which will not adversely affect marketability. The condition of the land must be common for the area, and the minimum down payment will be 35%. The maximum loan most lenders will offer is $1 million. In addition to qualifying for the land loan, by meeting the loan program debt ratio requirements and minimum credit score of 680, the borrowers must also explain the exit strategy out of the land loan. In other words, the lender wants to know how the borrower plans to pay off the land loan by the maturity date that's only a few years away. If the borrower will pay it off by getting a construction loan, then they'll want to review their financials to confirm the borrower has the capacity to qualify for a construction loan too. And land loans take from 30 to 45 days to process, barring any surprises on the piece of land. Interest rates reflect the risk perceived by the lender and are usually 1 to 1.5% higher than the going 0-point rate on a 30-year mortgage loan for a single-family dwelling. And lastly, I did want to cover lots that are bigger than 5 acres, since those large lots essentially they're rarer to find. Comps are very important. So the lender will look at the value based on other properties similar that have recently sold to be sure that it's supported, as well as the intent. If there's a commercial intent behind the purchase to build out commercial properties or a subdivision, that sort of thing, that could be a problem too. So if there are any questions now, let's go ahead and throw them out there, and I can do my best to answer them. If you have any also after the presentation, please text, email, or call me with them. Okay, well, there's no questions, so thank you very much for calling in. The next Mortgage Monday will be August 20th. That's in about a little over a month. I'll be taking a break in the next 2 weeks, so we'll skip the next one and start up again August 20th. Thank you very much for calling in. Aloha.